Welcome to our video on inflation, the silent thief that's been stealing your purchasing power for years. But don't worry, we're here to blow the whistle on this sneaky villain.
First things first, let's define what inflation is. Inflation is the rate at which the general level of prices for goods and services is rising and subsequently, purchasing power is falling. In other words, it's the reason why that pack of gum you used to buy for a nickel now costs you a quarter. Inflation has been around for centuries. In ancient Rome, the prices of goods quadrupled in the course of a century, making it difficult for the average citizen to make ends meet. Now, you may be wondering what causes this sneaky villain to rear its ugly head. There are a few main causes of inflation, including demand pull inflation, cost push inflation, and built-in inflation. Demand pull inflation occurs when the overall demand for goods and services outpaces the overall supply, causing prices to rise. Cost push inflation happens when the costs of production go up, such as an increase in the cost of raw materials or wages. Built-in inflation is when businesses increase prices in anticipation of future inflation. One of the most well-known examples of inflation in recent history is the German hyperinflation of the 1920s. The government printed too much money to pay for World War I, causing prices to skyrocket and the economy to spiral out of control.
In this section, we will be discussing the effects of inflation on the economy and individuals. One of the most significant effects of inflation is its impact on the economy. High inflation can lead to a decrease in economic growth and an increase in unemployment. As prices rise, businesses may have to raise their prices, which can lead to decreased demand for their products. This can result in businesses laying off employees or even shutting down completely. In the 1970s, the United States experienced a period of high inflation known as stagflation, a combination of high inflation and high unemployment. This was a rare occurrence and economists were stumped on how to solve it. Inflation also affects individuals by decreasing their purchasing power. As prices rise, the same amount of money can buy less and less. This can make it difficult for individuals to afford the goods and services they need to live. During the hyperinflation in Germany in the 1920s, prices were increasing so rapidly that people would have to carry wheelbarrows full of money just to buy basic necessities.
In this section, we will be discussing how to protect yourself from inflation and government policies to combat it. One way to protect yourself from inflation is by investing in assets that tend to increase in value during inflationary periods. Examples of such assets include real estate, precious metals, and stocks of companies that have pricing power. Fun fact: gold is considered a traditional hedge against inflation, as its value tends to increase when the value of paper currency decreases. During the hyperinflation in Zimbabwe in the 2000s, people with mortgages found themselves owing more than the value of their homes. The government also has a role to play in combating inflation through monetary and fiscal policies. Monetary policy refers to the actions taken by a central bank, such as controlling the money supply and setting interest rates. Fiscal policy refers to government spending and tax policies. Together, these policies can help to stabilize prices and promote economic growth.
It is important to remember that inflation is a natural part of an economy and it is not always bad. In moderate levels, it is a sign of economic growth and development. But when it becomes too high, it can have negative consequences on both the economy and individuals. Some countries like Japan and Switzerland have had very low inflation rates for decades, which has contributed to the stability of their economies. In the 90s, during the Asian financial crisis, countries like Thailand, Indonesia, and South Korea experienced high inflation, which led to a decrease in living standards and an increase in poverty. That's it for our video on inflation, the silent thief that's been stealing your purchasing power for years. We hope you found it informative and entertaining. If you liked what you saw and learned, please leave a like and write a comment. We would love to hear your thoughts on the topic. And if you want to be informed about more topics like this one, please don't forget to subscribe to our channel for more videos like this. Thank you for watching and we'll see you in our next video.